Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Monday, the last trading day, thank God, of January. What a disastrous month this was, and a wild end to the month, too. Pretty lot of short covering, maybe some buy the dip thinking, but people just don't know. I think that what it came down to is a lot of, at the end of the month, people just coming out of positions and going, okay, now what? As you can see, a lot of green behind me in these markets. One after the other, in fact. TLT down a little bit. BND, same family down, but everything else basically up. So that's pretty important. Now, I asked you for markets to cover. I got a lot of responses. I'll choose Bank of America. We haven't done a bank, so might as well go for one of those. And as we take a look at the chart action here, you can see the steep decline from 50 back down to the 42.5 range, and the market starting to stabilize. The pattern has been one of actually lower highs all the way through, and it had been lower lows. The change in character happened today. Now what we have is a higher low and lower highs. Now that can change like this. If the market gets through $44.45. That would give it a new impetus to the downside. Or if you can clear 46.75, that starts giving the bulls a ray of hope. Why? Look where the moving average is. You're coming right into that number. It'll fall tomorrow too. So when it falls, that'll be where you're at. Can you close up and over that number? Now, if we step back and look at the chart, what the market did is after the uptrend back here, this is always important to look at, you had the pattern of higher lows, higher highs. When you break right here, you break the pattern. You have an outside day to the downside, you get your follow through. The first logical support, just on moving average, the 18-day, right here in red, then the green, then the 200. Doesn't mean you have to hit all of them. Typically, though, you try for the 18, and that's what the market tried to do. Then the battle went on where it fought right there. Then the market started losing the battle, and it goes to the 100. Logic tells you it should try to hold there a little bit. It doesn't. It just falls right away, hits the 200-day average, and comes bouncing off. Now, the importance of the 200-day cannot be underestimated. It represents almost a year's worth of a moving average. And when you look at that, if the market's coming down, often you'll get your short covering, your support, whatever you want to call it. On the way back up, what had been support, the 100, becomes the first resistance in the market. And we can take a look. Did the market fight there? Take a look and see how it comes back. Because it got over it, now it's going to battle right there, just like I was saying. And if it can clear this, the next stopping zone is the 18. So we're at a very important juncture here. In terms of the Bollinger Band, the very first time you hit the Bollinger Band, what did you do? That was the end of the decline. So often what I teach in my enhanced Bollinger Band course is how to recognize that and how to put together 2 and 2 with, is the market embedded, oversold, what is it doing? This was classic what I teach. Now the market is neutral. It is waiting right now to see, does it want to get bullish by closing over this 46.94 level? Does it want to get bearish? But if it gets bearish, I see again the support of 43.86 and 42.90. If it can clear 46.75 and close over here, it's got a big path wide open to 50 if it can get anything going. As we step to Apple, Apple's getting follow through from the stellar numbers that came out in its earnings report, just following right on through, not giving you much of a chance. You either stepped in against the 100-day average, again, one of those key averages, with a Bollinger Band. Classic what I teach here in these videos. As this market was coming down, I was saying, all right, a gorilla glue trade, because every day you're hitting that lower band. Support, the 100-day, is it going to support it, or is it going to go for this number? You have a market that is not embedded. You're oversold as you get there. The next day is going to be crucial. The next day, you're embedded. Why? Day 1 of embedding, 2, and the day behind it. What happens if you lose the embedded status? If you lose it, the odds favor the market's going to make a run for the 18-day average or the closest main moving average to it, and the others are below the market, so it would be up on the upside there. You took off on Friday, still embedded, and today, where are you? You haven't lost the embedded reading. So, excuse me, right here you are. My finger got caught. So right here, January 28th, you get up to the 18-day average, you're extending through it. So here's where you were, what I was saying, hadn't lost the reading. Now you get there, and notice how it stalls. That's what I'd expect. If it can mount another attack, possibly you get up to the upper Bollinger Band. That could be the next thing. I think it more likely that the market will try to set back into the 18-day average and get its footing. What would I call the trend? Up. The bias, up. Momentum, up. Market's back into its own bullish trend again. When we come to XLF, the financial select, you can see how the market on the way down, again, the 100-day average, then you got a combination of the Bollinger Band and the 200-day if that gives ground. Notice again how the markets try to hold key moving averages. Now, this is what I'll call a vertical price decline. The reason in part is that the market's gotten lower and low every single day, not even giving you a chance at a rally. But when you get down here in an oversold condition into the lower band, ring the bell, say goodbye, and see what the market does afterwards. Market makes the lower low, comes back, and this is what you're fighting right now. So the market is caught between trying to find support at the lower band and the 200-day average and resistance at the 100-day, possibly up to the 18. Who's got control of the market? The bears right now. They lose it if the market takes out the high right here, right this day, of 39.34. If that's taken out, then you get a pattern of higher lows, then a higher high, and just like I showed you, if you close over the 18-day average, it might set off the bull signals again. Disney. Market was staying sharply underneath the Bollinger Band, finally moved to the right-hand side in an oversold condition. Not much I can tell you to do with a chart like this. While you've got the trend up, the bias is down, you're correcting an oversold condition. It's not a turnaround story on that. When I look at FB, Facebook, the meta platforms, I don't understand their name, but that's me. You've got the lower highs and the higher lows. So right now you have a contra trend to the upside. You never did embed. The resistance should show itself, I'm thinking, at the 18-day average, certainly at these two numbers, but I don't know that it has enough power to get up to those. To me, this is more of a short covering rally than fresh buying stepping in. Same thing in XLI. You're bouncing away from the lower Bollinger Band. What are the odds of staying under the black lines? 5% of the time. How often do you, in a succession, stay under them? It's rare to get beyond 5. So you stretch the band out. Now you've moved to the right-hand side. What else do you see? The boys are waiting for you up here. Come on and play. I want to be a seller at the 200-day, the 100, and the 18-day average of closes, and I think that's what they're telling you. Plus, you're liable to get a bearish rollover in the market now, where the 18 gets under all those numbers. That doesn't mean you can't go through them up. It means the boys are waiting to sell it to you up there. And who are the boys? The hidden pros. All right, so XSD. Again, you get to the lower bands, you come in, you rode the band down, you went to the 200-day, you fell one more time through that low, and notice how you come back here. Where, if you were sitting next to me, would you look at this chart and say, we lost the embedded rating. We've already hit the 200-day average. To me, that means we're probably going to the 18, and we'll see what the market's made up. You did really good. Now we get to the housing. What'd you do? You lost the embedded reading. So unless you get it back tomorrow, what do I think the market's going to do? I'm targeting right here, these two averages. Now notice how the 18 is getting ready to crisscross the 200. So you've got a whole slew of numbers up here that are waiting for this market to sell into. That doesn't mean you can't get to them, bust through them, but the odds are not that you're going to just pick up and run. Could happen, but I don't think it's going to be that way. In XLE, the energy sector, as long as you have an embedded reading on these breaks, the pros, in my opinion, are buying, looking to get back to the upper Bollinger Band. And the first time you get a settlement of the red number under 79, I think they'll say goodbye. Had a great time with you. So long. What do you do in GLD? You went from the upper band to the lower band. You know what I'm going to teach you. That's where the pros come out. That's what I teach. Now your first resistance, second, and third. Is it starting to make sense? I hope it is, because it's not that hard to see. GDX, what do you do the first time you hit the band? What if you got out at the first time you hit the band up here? What if you got out of shorts again there? What if you were long and you got out up there? Some of these markets really show you what that theory is. And, you can argue it all you want. I don't. It's also not a theory where I'm telling you to buy the lower band to go back up. It doesn't always go that way. That's the sucker play. You see it work like this and you go, I'm going to get in because it's going. I don't know anyone that teaches that. I don't think it would be very wise. Then we get to XME, the miners. Be careful here. This 18-day average is going to try to come down to the 200 and the 100. That's going to be your battleground in the market. We're seeing this pattern in a lot of markets where all these averages are converging. It's going to be an interesting time when they come back up to them. These are hard markets to trade because the break this month has gotten everything oversold. And, you get a few like an Apple that takes off, but most of these markets got into oversold territory. Copper, same thing. Copper for me was one of the easier calls to make. I think every night I've been here telling you, do you want to own copper as we start today? The Golden Week and the lunar holiday in China? No, they're 50% of the world consumption. If the buyers are on holiday with their family right now for whatever, let's wait for them to come back and start buying again. That's how I'd want to run it, and I think that's why the market has come down. Doesn't have to wait for the holiday to be over. These traders will drift back in, but right now at the beginning of the holiday, I think they're gone. TLT, here's the real story. You've got to always pay attention when the Bollinger Bands, this black line here and here, start going sideways. From sideways action comes big moves. You had one here, and you can see how the market let go of itself. Now you're in the process right now of developing another one. Bias would tell you, because if the Fed's going to keep raising interest rates, that with the moving averages above the market, the path of least resistance is likely down, but getting through and staying under Bollinger Bands is a real trick. FXE, you got to the lower Bollinger Band, just missed it here. Run your own numbers, you'll see. You hit it for the first time, got under it. Look at that. Now you're getting your bounce away. And when we reopen, you might lose the embedded reading, which if that occurs and you get a settlement tomorrow over 21, you're at an 18.3. I think you're going back then to the 18-day average. I talk, not only this talk, but buy here, sell there. Here's a lower risk, higher risk, medium risk trades that I'm seeing. Here's the dollars on them. I do it each weekday morning, Monday through Friday. I cover the daily charts. A lot of times I'll mix in a weekly with it, and then I throw the news at you. Saturday mornings, I do one thing, all longer-term charts. So from Saturday to Saturday, we're looking at weekly charts, and I do that show for you. So you're getting 6 videos a week. I want to be the guy you go to and say, hey, I'm looking at all these things. What is Ira thinking on them? And I'm rotating them. I'm rotating individual stocks, different vehicles, and I'm always asking you about it. I'm saying, what do you want me to cover, just the way we're doing with Bank of America here? So I'll do Bank of America for a while. All you need to do is write me for other ones that you have an idea on. I'll look at them. Come next Monday, I'll probably make a change. I'm Ira Epstein. If you want to find out more, just go to our website under the word research. It's all waiting for you. Take care.